address one particular company that came out with numbers, that is JB Pharma, which reported an inline Q4 earnings with a profit growth of around 19% Nikhil Chopra is joining in. He's the CEO and the whole-time director at JB Pharma to talk about the numbers. Nikhil, hi, welcome to the show. Good to see you in. Domestic growth has been extremely strong for you this quarter, 20% growth for the entire fiscal, and you're also outperforming IPM. Give us a sense in terms of how the key brands did, the likes of Metrogyl and the others, such as Razil as well as Cilacar. What were the franchises like this quarter, and what are you guiding for going into FY26? Do you expect this growth to continue?
First of all, good afternoon, Ekta, and good to be back on CNBC. And Ekta, welcome back. After a long time, we are meeting.
Thank you.
It was a good year in terms of what we performed. If you look at our domestic growth, which has demonstrated 20% for the current year, but if you look at ex-Opthal, which is a franchise what we acquired, the growth is 12%. Still, the growth is much better than the Indian pharma market growth. We continue to beat Indian pharma market by 300 to 400 bips. And you at CNBC and your team have been tracking our journey for last now 4 years in terms of what we have committed, we have been able to deliver. This journey, according to me, will continue for next 3 to 5 years in terms of the portfolio that we have built over a period of time. What we were talking, whether it's a heart failure pill, Azmada, whether we are talking of lipid pill, Razil, whether we are talking of number one anti-hypertensive brand today in the country, Cilacar and Cilacar T, all are demonstrating good volume growth. When I talk of volume growth, it all tells about the better penetration and better prescriptive in nature. So that is where we stand. We continue to be now number 8. We are now number 8th company in the world of cardiology in the country, with all what I've spoken in the world of cardiology, what we have done, hypertension, heart failure, lipids, equally backed up by, there was a good demand for Metrogyl this year, which grew at around 10-11% for the year, the progressive portfolio of metronidazole franchisee. And last but not the least, we are also happy to share now that Sporolac, our probiotic brand, is now among the top 300 brands in the country. So today now we have 6 brands in top 300, that is Cilacar, Nicardia, Cilacar T, Rantac, Metrogyl, and now Sporolac. That is how we are placed. And the fundamentals of the business looks very strong.
Right.
Not only that, tomorrow we want to grow better than the market, but also we want to inch up our ranking in the prescription ranking overall as a company.
So that brings us to two-part questions. Nikhil, a couple of things that have happened under your leadership. One is the surge that we've seen in the domestic part of the business as against just, selling to the US and other markets. And the second part is that you're saying that you are increasing your, looking to increase your prescription drugs as well. So to that extent, what would be your ANSP going forward? That's point number one. And secondly, at what rate do you expect your domestic business to go and the other businesses to grow over the next 1 year or 2 years, if you must?
Short to medium term, Mangalam is what we see company growing at nearly around 12% overall as a company, but 2 parts of the business. India should grow at 12 to 14%, and equally outside India, CDMO should also grow at around 12 to 14%. If you look at historically, in my past interviews, what we have been talking for the world of CDMO, it has been a very progressive category for us outside India, particularly what we do in the world of lozenges with our players, consumer partners outside India. Our CDMO run rate, though the business has not grown this year, is average 110 crores this year every quarter. So we have done around 430, 440 crores. There are some good progressive marquee projects which will be additive to this entire business. So by end of this year, those projects, be it our lozenges which will be going to Europe and US market, we are getting into newer way of drug delivery that is throat spray. We are getting into the entire world of iodine-based formulations for gargles, for creams and ointments. Those all projects are on. So FY27, our average run rate every quarter, which is 110 crore for the FY25, FY27 will be 150 crores. So we see the CDMO business also next 3 years CAGR growing at around 15%, India growing at around 12%, and anything if we buy in India, which we continue to evaluate assets, will be additive in nature. And last but not the least, also I would like to talk about that in last 3 years, we have been raising our EBITDA margin guidance. So if you look at what we scored in terms of EBITDA for the year FY25 was 26.3%. Our guidance was 25 to 27%. This year yesterday in our investor call, we have raised our EBITDA guidance to now 27 to 29%, which was 25 to 27% up till now. So a lot of improvement that we are trying to see in the mix of business. We are trying to look at how do you drive organization which is more efficient. And also our productivity per medical rep now, including the ophthalmology business, for the current year stands now at 8 lakh rupees, which was 4 years ago, 4.6 lakh rupees. So productivity also has gone up, and we would like to challenge ourselves that how do we take this productivity and grow it around 12 to 14% in next 3 years.
Okay. All right. Well, Nikhil, while the CDMO business seems to be firing on all cylinders, just wanted to touch upon the US business for you.
Ekta, US is a very small business for us. We are doing around $30 million, and we have got 15 ANDAs approved, which JP as a company holds. Also happy to share we had a US FDA audit in the month of March, which happens every year for our formulation as well as API business. Not only no 483s, but no observations. That is how we run our manufacturing plants. We continue to file 3 to 4 ANDAs every year, looking at more opportunity, low volume, high value, opportunistic. But we don't expect this business to become big. Our major focus continues to be India, CDMO, and in some parts of ROW market, because there we see a lot of opportunities. We have been filing every year 10 products in the ROW market, and those products will start commercializing FY27. So from there, the entire run rate for our business will be, the business today is $50 million. We do around $12 million every quarter. That business today is growing at high single digit. We expect when these new products, which we have registered for last 3 years, 10 products, 30 products in last 3 years, when they start commercializing in FY27, this business should also grow at mid-teens with better EBITDA margins.
What about
India, CDMO growing at 12 to 14%, and US high single digit. Yeah.
Okay.
What about the cash on your books? I just wanted to know, 700 crores of cash on your books. You said that you are looking at some sort of M&A. You mentioned that briefly. What categories are you looking at? How close to a deal closure are you?
Not that we are closer to any deal closing, but Mangalam, we continue to evaluate assets. And in last 4 years, we have done 5 deals. More opportunistic that we would like to do, more we would like to see in the space and the areas where we are present, more in the area of cardiology, probiotics, pediatrics, or women health. Given a choice, we would like to buy something in that space. It all depends upon what value the asset is available, and if we are able to do justice with that asset, and also we are able to do justice with the existing portfolio that we have to grow better than the market.
Okay. Well, Nikhil, we can't end this conversation by not asking you about KKR's plans. They've sold around 5% stake. Give us what the plan is with regards to KKR and JB Pharma.
KKR being a responsible private equity player in the country, and they diluted 7% stake. They continue to be the promoter, and they continue to hold 47% stake in the company. Business Ekta is as usual. Also, I would like to share with you that we have now got a new chairman, Mr. Arun Duggal, who is an ex-Bank of America. He now is a chairman of the company. In last board meeting, we have got now Mr. Ashwini Puri, who also have joined our board. He is also on the board of Titan. Business continues to be as usual. We have 3 folks from KKR on the board. We continue to discuss our ongoing progression in terms of what business we want to do in next 3 to 5 years. We already have made a plan that how do we grow this business at around 12 to 14% CAGR for next 3 to 5 years. KKR will take its own call at the right time in terms of right values, what they think. Very less that as a management team that I would be in a position to comment.
So they're still, they're still considering their options at this point in time. They're looking for buyers.
See, it's very difficult for me to talk about this because we being the management team, we are responsible for running the business. It's at the day call from KKR that what do they think is the right time in terms of when they want to exit.
All right, fine. Fair enough, Nikhil. I'm sure we're going to hear probably a little more about that in weeks and months to come. Thanks very much for joining in and speaking with us and talking to us about the guidance. We need to take a short break now, but up next, technical Sameet Chavan of Angel One will be joining in.